Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. And today is Friday, December the 31st, 2010. Happy New Year, the last video of 2010 and the first for 2011. So check it out. Okay, for those of you guys who do not know, we're changing up our videos a little bit. Before we used to put them out every single night and we'd analyze the markets. That was really a waste of time on both our part as well as yours because once the analysis has been read, there's actually not a lot to update the following day or the following day. It's pretty much everything remains the same, and then every couple of days we get something new. But for the most part, there's no need for us every single day doing a video. So what we're doing now is it's on the website every single Friday. We do a video covering the global markets for you to check out for the week ahead. All right, and this is that video. So check this out. We're going to start off looking at Australia. And what we have here is the bullish engulfing signal here with this candlestick bullishly engulfs this particular candlestick. That would be the buy signal. You put the stop right there. Now you've had a three strong weeks to the upside, and then this week is the close, and you'll notice it is showing some weakness here. That would be my exit signal. I would simply go looking for another position to trade from. I like to start buying at the reversal point. Don't want to be doing my buying here when we're starting to see weakness in this net. The market can shake this off, but that's up to you if you want to trade that. You do still have a bullish uptrend here, but again, my trade was from here to here, and I'm done. Okay, a quick look here at the Dow Jones Industrial Average. There's been a lot of low volume all week, around the globe basically because of all the holidays. But that's normal. You wouldn't expect anything different. And you'll notice here you've had the nice bullish engulfing candlestick. This candlestick totally engulfs this one. That would be the buy signal. The stop would be here. And she's had 1, 2, 3, 4 consecutive weeks to the upside. You'll notice this candlestick right here is flat, but it's still up slightly above the previous candlestick. This is 1 week's activity, and it's closed up 4 points from the previous candlestick. So it's still in a bullish uptrend. No reason to change anything here. You definitely wouldn't short this or anything of that nature. She's still in a bullish uptrend, still moving to the upside. All right, a quick look here at the London Financial Times Index, the FTSE. You'll notice you had the same buy signal right here, bullish engulfing of the previous candlestick formation. Your stop would be here. She's made you money for the past 4 weeks, but this week she's showing some nice reversal right here, weakness, and it's not a bearish engulfing, so you wouldn't short this. You need a bearish engulfing signal like that. All right, bearishly engulfing the previous candlestick to actually confirm a short, but you are seeing a pullback here, so I'd be exiting this trade. It would not be long this particular market average, and I wouldn't be looking to go long next week. I just let it do whatever it wants to do and wait for another buy signal like this. If I don't get something like that, I'm just going to stay out of it. All right, quick look here at the NASDAQ here in the U.S. You'll notice last week we talked about that being over the 70 line, the RSI, telling you basically you're getting a bit overextended like you did back here. And now you're starting to see weakness. This candlestick is showing weakness compared to the previous, and I'd be exiting here. Again, this was the buy signal right there at bullish engulfing, and that was the point that you want to be a buyer at. Stop would have been right there, and you had about 4 or 5 weeks to the upside before you got this move to here. Notice this candlestick formation here looks a lot like the current week's candlestick for the Dow Jones Industrial Average. That's not weakness. That's just consolidation. It's neither bullish nor bearish, but it's just a point of consolidation before moving higher in this case, and we may see that again in the Dow Jones Industrial Average. We've been seeing a lot of that this week, where you've seen the Nasdaq down pretty good this week as far as compared to the Dow Jones Industrial Average. That the Dow Jones was continuing to move to the upside. So just kind of keep that in mind. Ultimately, I would be out of the NASDAQ, would not be long the NASDAQ at this point. Okay, here we are looking at the Russell 2000 Small Cap Index Basic. Same story. Here was the buy signal right there, bullish engulfing the previous candlestick. Stop would have been here. You had a nice opportunity to be a buyer 1, 2, 3, 4 weeks to the upside, and now you're getting some weakness with the shooting star formation here. You could just exit there. You'll notice also you were up above that 70 line. That's one of those telltale signs that you're getting up there. You're starting to get overextended. Expect a pullback. So that's what you to see this candlestick formation here for the week makes sense to me. But again, I wouldn't be a buyer here. I'd go ahead and exit that. So the question in everybody's mind by now is, okay, we know what we should be exiting. We've seen the weaknesses that are out there. Where should we be going long if we want to go long? Well, let's go have a look. Okay, this is the S&P 500. You'll still see the bullish buy signal here. had a move to 1, 2, 3, 4 weeks to the upside, doing better than the Dow Jones for the week. And this would still be a hold. You could still hold this until you get some weakness or stopped out. But the Dow Jones and the S&P are both holds in my book. But I would not be looking to make new acquisitions here. I would actually start moving and look at China. Okay, this is the Hong Kong Hang Seng Index. Last Thursday, we told you to have a look at these guys. They were showing a bounce reversal situation going on. Then we told you confirmation would be in place if you had a break of the downtrend line. Well, you've got the break of this downtrend line right here. This candlestick formation is closed above it, breaking the downtrend line. And you're starting to see, again, a bullish engulfing signal right here, which means your stop would be right there. The low of 22.4 would be your stop, and you'd be a buyer here with looking for a move back to test the previous high. That would make sense to me. Also, this overall chart is very bullish. You'll notice here was a resistance point that you ricochet off of, and extend that out. You can see that you sold off here, bounced up to it again, bounced back off, and then this time through went right through it, closed above it, moved to the upside, got a bit overextended, and then just pulled back to consolidate and find support upon the previous resistance line. This previous resistance line is now acting as support. Also, you have support from this middle Bollinger Band line right here, and again, this longer term uptrend line here. This is all a lot of strength that you should be expecting to see the price activity respond this way on that support line. So that makes sense to me. And this is where I would be looking if I was going to go long. And you also notice if you're paying attention this week in the U.S. markets, about midweek, all of a sudden you started seeing a shift in the individual companies that were getting hot out there. All of a sudden it was Chinese stocks, these companies that are trading in the U.S., but they're somehow tied to China. They were starting to get hot because they're breaking out right here. So that makes sense, okay? I do believe this is one of the strongest charts that I've seen out there as far as the U.S. I'm sorry, the global major market averages. I would keep a tight stop in any event. It's always a trade you're making. So you got a bullish engulfing signal. You'd be a buyer here. You go ahead and buy that tight stop and trade it to the long side. We've seen a lot of opportunities in commodities. This is something everybody's talking about for 2011. Oil, gold, silver, these are really going to be hot and they're showing their strength right now. Gold's making new highs, closing at new highs on weekly candlestick formations, and you expect this to keep pressing to the upside. It makes sense to me. I'm not as bullish on gold as I am on silver simply because we've seen a little bit of weakness here. She did dip below that uptrend line before making a move back above it. So this is still bullish. What we said before is you had a buy signal here, advance up to here, show some weakness, another buy signal here, stop would have been here. She continued to stay upside, kicked you out right there, and then she just traded sideways for a while. Now she started to take off again. This may continue to be that way, but I'm not going to trade this from the long side. I'm definitely not going to short it, but I think I see better potential in silver. All right, quick look here at oil. This is a chart of oil, and you've noticed you had a previous resistance line here. You had to break out, and you've been advancing. A very strong chart here. Really like this. Here was the buy signal and bullish engulfing. The stop would have been here. You've had 1, 2, 3, 4 consecutive weeks to the upside, and this is a continuation candlestick to the upside. So you expect this to continue to move into the upside. You wouldn't preemptively start shorting or anything of that nature. You are above that RSI 70 line, so you would be looking for that weakness sign to start showing up, but until the chart shows it to you, you just continue to trade the trend long. Here's a quick look at silver. You've noticed you've got this really strong uptrend line here. We talked about this in the past, told you we didn't really expect any major selling here simply because there's just a nice bit of buying activity going on right here. Broke out of a nice consolidation base formation here. It's a very bullish chart formation, and this is one of the very few chart patterns where you can actually sustain a situation where you are above the 70 line for an extended period of time. So whenever you get something like this, you can see that run up there above the 70 line and stay that way. It doesn't really bother you as long as she maintains the respect of the uptrend line. You're good. In this particular situation, you're seeing a very nice move to the upside here, new high close here at 30.83, and a continuation candlestick to the upside. So you look for this to continue to moving to the upside. This is one of the stronger charts. Like I said, between gold and silver, I prefer silver. Because the commodities are as strong as they are right now, stocks that are focused in drilling or mining and oil or silver or gold, mining stocks, that kind of thing. You could see that kind of strength in the U.S. here in the individual companies that you might be picking out of the market averages. So you could see that. I can understand it, but always keep a tight stop. Quick look here at Canada. There was the buy signal, bullish engulfing. There was the stop. You advance 1, 2, 3. Weakness here. You could have been out there or stopped out, and then you took off again to the upside. I wouldn't chase it simply because the RSI is above the 70 line. Anything at 70 or higher is considered extremely overbought, and you start looking for that to get a some ceiling up there, some kind of resistance level, and they're going to start pulling back. I'd wait for a better buy opportunity. Don't chase this. All right, quick look here at the BSE index, India Bombay Stock Exchange, and like we've talked about before, here's your resistance line. You broke out, consolidated, advanced from that point, got nice and overextended, pulled back. If you were shorting, that was your short signal right there, where you had a bearish engulfing the previous candlestick formation, and then she pulled down for a couple of weeks, and you got stopped out on this particular candlestick formation here. She consolidated, and now she's advancing again to the upside. I'd let this one go for now. I'm not going to chase it, and I don't really see a good quality buy signal in the mix there, so she can go ahead and run without me. I got better opportunities in China, in my opinion, so that's where I see the markets for the week ahead. We do have a couple of announcements to make. All right, if you've been to our free website at perfectstockalert.com, you know it's 100% free, all kinds of cool stuff there. And over here in the corner, we've got our traders forum, lots of really smart guys and investors in there, traders and investors basically sharing their ideas of what they see for 2011, different opportunities that they see, support and so on. We'd like to see you there. Really cool. We've also brought out, and we're bringing out new stuff this weekend, PSA reports. We've added our portfolio for 2011. All right, that's going to be a really cool feature there. It's already got an alert there as my trading portfolio. You can see what's going on there. Also, our perfect stock alerts. We've been issuing these. All of those have made money short term for our members there. You can check that out. And we have another one coming out this weekend, I do believe. Yes, we have another one coming out this weekend. And like I said, there's already one in our portfolio. So check that out and enjoy your weekend. You know, the market's going to be open, of course, all next week. But it is the new year for those of us who, have the same calendar. And God bless. Take care. Have a quick look at our disclaimer. Be safe out there, but have fun with your families and friends. I'll see you all on Monday. There's the disclaimer. Read it and weep. God bless and take care.